Today is shaped up to be a very docile but yet slightly bearish day for the overall S&P 500 as well as for AMC stock. Now, AMC as well as a lot of your momentum stocks as of recently, GameStop, BBBY, so on and so forth, have been performing very well over the last 5 to 10 trading days. Today taking a little bit of a breather here. Most of those stocks down in between 5 and 10% today, but still looking bullish over the last 5 or 10 days. This is really a consolidation day. We haven't really seen any big drops in AMC for a decent amount of time. We've strung together a lot of green days. So forget the people that are coming out and saying, you know, AMC's over, that was the rally, that's it. That's obviously not the case. Ape shares are going to expose synthetic shares, naked shorts, all of that, right? So instinctively, you're going to get a lot of back and forth, but you're going to see a lot more bullishness than bearishness, in my personal opinion. Now, for tomorrow, we do have the CPI data that does come out at 8:30 in the morning, so make sure you guys finalize your trades by the end of the trading day today. You also have earnings such as Roblox, Coinbase, The Trade Desk, Plug Power, Unity, Wish, Celsius, Invitae, Wynn Resorts, and Magnite coming here today in after hours, and those companies will help move certain sectors of the stock market and could give an even bigger move to an already important data point, which is CPI coming out tomorrow. You have PPI on Thursday, which that will also be important, and then you have the Michigan Consumer Sentiment Survey that comes out on Friday at 10 o'clock in the morning, and that is also going to be very, very important. Now, we could be looking at an emergency Fed rate hike coming in August if inflation comes in higher than expected. For the core inflation rate year over year, the reading tomorrow, we are expecting 6.1%. The last reading was 5.9%, so that would be a new high in recent history that we have seen. And that would not be good. That would be a month over month gain for core inflation. That is minus food and energy. Now, CPI, which is food and energy, I believe those two components make up about 35% of the CPI. That is expected to come down to 8.7% from 9.1%, again, recent high that we've seen last month. So if we get CPI that comes down, that's going to be probably a very bullish thing, but that is the reason why the markets have been rallying all along. So this could just be a fugazi rally that we have been seeing over the last couple of weeks. If inflation does indeed continue to go higher, you will see more pain in the stock market. Now, based off of the jobs report that we got on Friday, which was a net beat of over 250,000 jobs, over a 100% beat in the labor report, in the payroll report that nobody was expecting. The Dow Jones estimate was 258,000 new jobs. You came in at well over 520,000 new jobs. That shows people are not losing their jobs because what the Fed is doing. The markets can handle the more Fed rate hikes, and that is exactly the wrong thing you want as of right now in this current market environment. You actually want to see jobs at least slowing down, the labor market taking a little bit of a breather, and you also want to see inflation coming down. If you don't get both of those, or if both of those go higher, aka jobs are good, great, I mean, you can't ask for anything better, you're at maximum employment, and if you get inflation that continues to go higher, well, I think that is enough grounds for a rate hike coming in the month of August. Bear in mind that we don't have a scheduled rate hike for the month of August, but if people keep talking about it, like Jim Cramer talked about it last night, Marko Kolanovic said there's a decent chance of a August rate hike if inflation does continue to go higher, well, that's probably what we're going to get from the Fed. Now, the Fed also watches conditions in equity markets, right? The Fed knows if they're teetering between a market collapse or if they have room to hike. Now, almost every Fed meeting that we have gotten, we have been at the low for 2022, almost every single time. Well, heading into just data coming this week and the jobs report we've seen last week, we're substantially higher from the bottom. We're up roughly 14% from the lows, and I think that would justify the Fed giving us a August rate hike because financial conditions have loosened a lot. The 30, 20, 10-year treasuries have continued to go down lower, whereas even the 2-year yield has continued to rise, and that's why you're getting a inverted yield curve between the 2 and 10-year bonds of 48 basis points. You have not seen this in a very long time. So this is indicative of higher inflation over the next 2 years and potentially a pretty deep recession over the next couple of years as well. And that means the Fed probably wants to raise rates sooner rather than later. Now, how does all of this affect the markets and affect AMC stock? Well, the S&P is currently trading at 411.50 at the time of recording this video. We are hovering around the support at the 100-day moving average. This has been very key. We held support at the 50, broke out above the 100, and we have held support over the last week of trading above the 100. Now, we're right at that level. The 100-day moving average is sitting at 409.21. If you break down under that in a big way, well, you're going to get a lot of pain probably in the stock market. You're probably going to head back down to the 50-day moving average, possibly by the end of this week. That would be a move down of about, let's go ahead and pull it up, of about 4.47%. It's possible we could get that in one day, even if the CPI is bad. So that's really what I would target for some downside in the stock market. I think your upside is quite limited here just because even if CPI does come down, well, that's why the markets have been rallying, is because we already expected CPI to come down. So it's not like it would be, wow, you know, CPI is coming down in a big way. This is something that's very, very bullish. Not necessarily the case. Now, if we do get a bullish reaction, and that would probably be because core CPI goes down, normal CPI comes down, and then the expectations for a Fed rate hike go down as well, you might be able to reach as high as 430 on the S&P. That would be around the 200-day moving average. I doubt you break out above that because that would be completely reversing trend. You would be in a very bullish trend at that point if you broke out above the 200-day moving average, and I would expect to see new to all-time highs once you do break out of the 200-day moving average. So this could mean the difference theoretically between all-time highs and potentially new lows for the S&P 500, and new lows are certainly possible if we do get a August rate hike and or potentially a 75 or 1% rate hike in the month of September. Now, keep in mind, you do have more data between now and September. The September Fed meeting is September 21st. You do have CPI for August that comes out September 11th, and that will be the next biggest data point that we'll definitely want to watch besides the labor reports that we do get. And as of right now, as of the time of recording this video, 58% of investors expect to get a 75 basis point rate hike. 42% of investors expect a 50 basis point rate hike. That would bring the federal funds rate in between 3 and 3.25%. So that is obviously not good, and the longer inflation lasts, the longer the job market remains healthy, while more rate hikes to come. That's essentially what that means. So keep all of that in mind. As far as AMC and the actual data, let's go ahead and give this a brief rundown, and then we'll talk about AMC technicals and wrap up this video. So as far as the shorts, you do have $2.31 billion worth of short positions on AMC stock. 18.72% of the flow is currently sold short. Free flow out on loan is 25.6%. You are seeing this spread really closing a little bit, which is a bullish thing. Shares out on loan 132 million, days covered 2.87, cost to borrow 9.06, and 100% utilization. Cost to borrow max sitting at 10.49%, cost to borrow average at 8.59%, and cost to borrow minimum at 7.26%. So nothing to sneeze at there. All that data is looking very, very good. Now for the day, this is also very, very bullish. We've seen a lot of very healthy call options coming through. Let's just call it that. Some very large ones at that. $250,000, $500,000 orders. That is somewhat frequent over the last couple of days, and today is no exception. You have seen 10 orders totaling $699.36 thousand, positive order value of 90%. So very bullish what we're seeing right there as well. Now specifically with AMC stock, you want to watch the 200-day moving average. We are well above that at this current moment. 200-day moving average sitting at $20.83 per share. We are currently trading at $22.40 per share. share. So we almost have a $2 difference here, and that is the room to the downside that I wouldn't even care if we get. As long as we stay above the 200-day moving average, I could care less. This looks like a consolidation day in my personal opinion. If you've seen the last video, we have strung together some incredible rallies day after day after day. Today is the first day over the last, call it almost a week, that you have actually seen a red day. So I think that is very good. Volume still lower for the day. Looking to close out the day here very shortly. And we only have about 50 million shares that have traded hands. The RSI is at 71.31, so getting back down to more normal levels, not really as overbought as before. And you are seeing the MACD, which is just insanely bullish as of right now. So worst case scenario, if you get a bad day tomorrow, you could fall as low as 1850, but in that case, the markets would just be in the toilets. You're looking at a 4 or 5% down day to get AMC to fall $4 per share in one day. Now, if inflation is good and maybe even the meme stocks are seen as somewhat of a rush to safety, a different place to be in the markets that won't be as adversely affected by the broad markets, by the Fed, so on and so forth, you could possibly see as high as $30 by the end of this week, in my personal opinion. What I would expect to happen is really to hover around this 200-day moving average, and I am leaning towards a bullish response, at least with the AMC stock, after the data that we do get tomorrow. So that is going to be all for this video. Hit that like button and subscribe to the channel if you guys have not already. Get your free stocks down below in the description with Webull, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the description as well. You guys enjoy the rest of your day, and I will see you in the next one.